Hello, good morning, everyone. Welcome to our daily briefing. So let us start our briefing by taking a recap on previous important economic data. So the first one is UK average earnings include bonus July. So the previous is 8.8%, the forecast is 8.2%, the actual is 8.3%, which is slightly higher than the forecast. So this is actually a good news for GBP. And then we go to the next one. The next one is UK claimant count change August. So the previous is negative 448.9 thousand and the actual is negative 58.6 thousand. As we can see that there is getting lesser people for the to join the claimant count change. So this is actually a good news for the GBP too, because we can see that the UK labor market is getting better and better. Okay, then we go to the next one, UK unemployment rate July. So the previous is 4.7%, the forecast is 4.6%, and the actual is 4.6%, same as the forecast, but it is lower than the previous 4.7%, which is a good news for the GBP too. So we go to our market graph here, as we can see that the GBP USD, it rise up for almost 50 pips here because of this important economic data yesterday. Okay, so we go back to our PowerPoint here. Then the next one is US core inflation rate year on year August. So previous is 4.3%, forecast is 4.2%. The actual is just only 4%, which is slightly lower than the forecast. So this is not really good for the USD. Okay, and then we go to the next one, the US inflation rate year on year August. So the previous is 5.4%, the forecast is 5.3%, and the actual is also 5.3%. But then when it comes to month on month, which is lower than the forecast. So actually both the core inflation rate and also the inflation rate is not really good for the USD. So we go to our market graph here, as we can see that after the release of CPI, release of the CPI, US CPI, the US dollar, it fell down from 92.6 to around 92.2. So this is a big drop last night. So actually this happened cause all the US major cause all the forex major pair to have market volatility as last night, as we can see here, for around 90 pips and 70 pips or for 100 pips, as we can see that. And also the GBP USD is rise up because of the UK economic important data, but then it rise up again because of the US CPI. But then the US dollar index is rise up after a big drop here, then the GBP/USD is fall down because of the US dollar index rise up. Okay, so we go back to our PowerPoint here. Then the next one is previous day market volatility recap. Okay, so gold, it rise more than 270 pips last night. So what happened on the gold market last night? So let us read the factor here. Spot gold rose more than $20 last night to close at $1,804.51 per ounce, as the US inflation data was lower than expected. So which is investors' concern that the Federal Reserve will soon be forced to curtail bond purchases. Okay, so we go to the next part, is which important economic data we have to focus on today. So when it comes to EU section, we have to take focus on this important economic data, which is UK inflation rate year on year August. So the previous is 2%, the forecast is 2.9%, and the data release time is at 2 o'clock later. So if higher than expected reading should be taken as positive for the GBP, while lower than expected reading should be taken as negative for the GBP. Okay, then we go to the next part, is US session. There are two important economic data we have to focus on tonight. So which is Canada inflation rate year on year August, and the US EIA crude oil stock change. So we take a look at the first one, the Canada inflation rate year on year August. So the previous is 3.7% and the forecast is 3.9%. So the data release time is at 8:30 later at tonight. So a higher than expected reading should be taken as positive for the CAD, and then the lower expected reading should be taken as a negative for the CAD. Okay. So we go to the next one is US EIA crude oil stock change 10 September. So for last week, the previous is negative 1.529 million and the forecast is negative 3.903 million. So if higher, the data release time is at 10:30 at tonight. So if the increase is in crude oil inventories is more than expected, it implies weaker demand and is bearish for the crude prices. Okay. So if other scenario like the increase in crude is less than expected, it implies greater demand and is bullish for crude prices. Okay, so we go to the last part of our daily briefing for today is market update. For the resistance level of today is 1809 and 1809, and the support level is for today is 1796. So my personal opinion is bullish for today. So why I will take it as bullish? So let's read the factors here. So earlier CPI data was released, the last night, the US CPI. So showing that inflation was not good as expected and US bond yields started to fall. Okay, so the market seems to be interpreting this trend as a sign that the Fed will be more dovish in future monetary policy. Gold prices closed above the 50% retracement level of 1803 on Tuesday, which is last night. So indicating that there is a chance for further rise, but the shadow of the Fed shrinking lingering. Okay. So in addition, the breakthrough of 1803 is not considered strong, and the price of gold may still fall below. But why I will still take it as a rise for today, as a bullish for today, because we can see that we go to the market graph here. We can see that there's a fall of the stock market here in US30 and also the SBS 500 and also NAS 100 here. We can see that. So and also not just only the fall of stock market, and also the US bond yields also fall. So this is actually not very good for the USD. That's why I will see the gold market take it as a rise for today. So that's all for our briefing today. I wish you have a good day and see you again.